Welcome back to the Andrew Undem podcast. Today I'm with my good friend, Paul Concannon, a phenomenal loan officer who I worked exclusively with my first maybe 3 or 4 years in the business. That was, 12 years ago.
Yeah.
So Paul, tell everyone a little bit about yourself, your history, so we can get to know you better.
Yeah, of course. Thanks for having me. I feel like it's a long time coming here.
Yes, sir.
So I've been in the business for about 19 years. Started out pretty young, started out at a big bank. Worked my way up from, first couple of years being a loan officer's assistant. We had a sales force of about 10,000 people as a big bank and climbed my way up to number 3 in terms of unit volume. Stayed there for several years. Left after 15, 16 year tenure. Went to an independent mortgage shop for a couple of years, and now I'm at WesBanco, which is a great top 100 bank, but very much a small community regional bank that serves 7 to 8 states. We lend in 30 states, but have a footprint in 7 or 8 states.
Well, Paul, one of the reasons I wanted to have you on the show is you're like the consummate professional when it comes to mortgage banking, and I don't say that lightly. Like everyone you've worked with has had nothing but great things to say. You've taken care of a lot of our clients, and that little bank he was talking about, he was the number 3 producer at Wells Fargo. Have you ever heard of that company?
Yeah.
So you had like an army of people under you. So you were Mr. Wells Fargo, and now you're at WesBanco. Tell us a little bit about the differences between the two and some of the products that WesBanco offers that our listeners and other agents can tap into should they have buyers.
Yeah, so I had a great run, at Wells Fargo. Like I said, finished, number 3 there. It was a very big bank, very different, model. We did a ton of volume. We were a perennial top producer. I think 7 or 8 years we were top 200 in the country for the whole industry. Mm-hmm. As high as number 16 in 2016. We had a high watermark of 260 million in production one year. I mean, we were cracking 200 million before people even knew that was like a thing, especially locally. So great run there. But then life changes, right? Have kids, priorities shift a little bit. And you're looking at, what's a great place that I could be at that has great options for all of our clients. We've always been very client focused. We do a lot in the jumbo high-end space. We do a lot of portfolio lending, which means, we're lending off of our balance sheet, whether that's a doctor loan or construction loan, something outside the box, something that's not a traditional conventional loan. So WesBanco is a great fit. It had, the resources of a mortgage company, tied to a bank that has 17 billion in deposits, but it's also very small. So if we have a unique situation, I'm picking up the phone and calling 1 or 2 people, not calling one of 100 different underwriters. It's a small shop, but still has the resources of a much larger organization.
Yeah, that's fantastic. And one of the reasons I wanted Paul on the show is they have 3 or 4 products that are super niche that we love referring our clients to Paul for, particularly jumbo stuff, doctor things, construction loans, bridge loans. We'll dive into that. But Paul, one of the things I have to give you your roses here, when I was doing heavy production on the buy side, and I'm getting back into it quite a bit, whenever I would call you, you would always answer the phone.
Yeah.
That's like a lost art.
Yeah,
like when a real estate agent calls a lender, you need them to answer the phone. A lot of times I was with the buyers. You knew this. Yeah. I'd be with the buyers in the car and say, hey, Paul, can you whip up numbers on 1107 Elwood, 10% down conventional? Bang. And you just have it. That's an unbelievable resource. So what products at WesBanco should the real estate community know about? Because what I feel like these banks are always changing. Some people have doctor loans, then it goes away. And some people have jumbo, then it goes away. What's the deal now with the products?
And I'll preface it by saying we always look at every situation, and if we don't have something that's a good fit for it, we have a network that does.
Right.
And I think that's always the most important thing, and that comes back to us, right? If there's somebody looking to buy a $5 million house in Montana, like it's not in our wheelhouse, but we know a few people that could potentially be good. We find a great option, and then that person might have something they can't do, and they'll call us back. So I think we like to be the resource for everything in that kind of space. But specifically, I mean, we've had a lot of success with, we'll start with just traditional jumbo. So in our market, our footprint of 7 or 8 states, primarily Mid-Atlantic, Ohio, Virginia, Delaware, we'll do 5% down up to 1.5 million. And the reason that's such an advantage,
huge.
It used to be, there's been a little bit of a, regional banking crisis, if you will, last year. Before that happened, you could find a good amount of lenders that would do 10% down jumbo, primarily banks. It costs more. But since that regional banking crisis happened, a lot of people pulled back. Either the rates went sky high, or they said instead of 10% down, we're only doing 15% down, or they trim back the amount that they would lend. So the ability to do 5% down in this market's huge for a few reasons. People have equity trapped in their home. They have to make a non-contingent offer. They want to put their best foot forward. They have equity in that house, but they want to put down a little now. Then when they sell that house, they can take the money, pay it down, and recast the loan. Also, to be competitive, they want to waive the appraisal. So someone might have 10, 15, 20% down, but if that's all that they have, what happens if you bid $100,000 over the list price, the appraisal comes at $100,000 low, where's that money coming from? So the ability to put down 5% gives you a huge buffer. So if you have 15% down, the ability to do as little as 5% down, now you have that extra dry powder that you need to make that offer and waive the appraisal or cover a big appraisal gap.
I didn't even know 5% down up to 1.5 was a thing.
It's a thing.
Because it used to be, you had to have at least 10% down for jumbo. Now, to take a step back, explain to the listener, what is a jumbo loan in Maryland?
Yeah, so in Maryland, it changes every year, but currently, roughly $766,000 is the conventional loan limit. So that amount or less is considered a conventional loan. When you go over that amount, it's considered a jumbo mortgage.
So right now, if you're borrowing over 766, it's a jumbo loan.
Correct.
Most lenders on those types of loans, if they do them, require 20% down. Sometimes there's a hit on rate. What Paul's saying is, hey, look, 5% down, incredible rate, up to $1.5 million. And that does open up a world of strategy on how you make an offer. Because having cash on hand allows you to be more competitive, as Paul was saying. It's, hey, look, I'm putting 5% down on this 1.2 purchase. Now I can do an appraisal gap coverage because I have the extra cash. I can do a lot of different things. And you also mentioned recasting, which I think is interesting. Not a lot of agents or consumers know about this. Explain the recast. I think you recast one of my loans for me. It's an unbelievable product.
Yeah, so the ability to recast is, let's say you borrow $1 million and you have a lot of equity in your current home, $300,000-$400,000, but it's trapped in your house. So you purchase that new home non-contingent, you move in, you stage, you sell your house, then you have that equity freed up. Now you can replenish some savings, maybe you depleted, but a lot of people will be stuck with extra money that they wish they had put down to keep a lower payment. So the recast allows them to make that extra principal payment after closing. And if you do that with a regular mortgage, it doesn't automatically adjust the payment, but the recast allows you to recalculate the mortgage payment based on the lower balance. The key thing is with a jumbo loan, if you don't do it through a bank, you do not know kind of where that loan's going to end up, right? Versus with our jumbo loans, we're servicing them. So we have, it stays on our books. We service it. We have the ability to offer that recast option to consumers.
The recast is huge. It's, essentially after you buy the house, you can decide to put another chunk down and it recalculates your loan.
Right.
Not many people do that. I think you were doing that at Wells a little bit, but West Banco definitely does it.
Yeah. So, we're not the only one that does it, but there's only, you kind of have to go to a bank that's going to hold the note, if you will, to be able to do that. And a lot of clients will ask us, okay, what's my payment now? And then what's my payment if I pay down this balance? So they can get comfortable with, the going in payment, but also knowing that hopefully in the future they'll be able to lower the payment to a level that's more suitable for them long term.
The recast is huge, particularly in the jumbo world, because that is what we see all the time is, hey, I'm going to buy my home and then I'm going to sell my next one. Well, you can take that $200K equity, put it in your pocket, or you can take a portion of it and recalculate your loan. And that's your current interest rate sticks.
Correct.
Right? It's just a straight recalculation.
And if rates are low in the future, we can look at refinance options, but it's not contingent upon that, right? So the rate will stay the same. So if you want to take advantage of recasting, you can do it. If rates are lower in the future, then you can refinance and kill two birds with one stone.
All right, so you're an ace on jumbo. That was kind of always your niche, at least for me. Like anytime you have someone borrowing a large amount, you get them in touch with Paul. It doesn't matter how much they have down, whether it's 5%, 10%, 20% down. If you have the most competitive product suite in the jumbo space, you as the agent look like a rock star. And I always tell our clients, one of the components of value we provide in the relationship is to help you ensure you get the best mortgage product. That's why you have to have people who offer different products. Most lenders, and we work with secured funding, shout out to them quite a bit, they're not competitive in the jumbo space.
Right.
So you need a deep Rolodex if you're serious about serving clients at a high level. So we covered jumbo. That's a great soundbite. Let's talk a little bit about the doctor loan, something I'm very familiar with, very into, and it seems like that's ebbed and flowed so much over the years. How's West Banco in that market?
Yeah, great in that category, and that was a nice tool to have. The ability to put down, as little as 0% for a doctor loan. And also, not to get too technical, but, if you're coming out of residency, you're coming out of a fellowship, if you get a traditional conventional mortgage, there are some guidelines that, the typical medical professional doesn't fit within that box. A conventional loan, they want to know that your job is going to have a high likelihood of continuing for the next 3 years. Well, if you're in a fellowship that's over in, 6 months, that doesn't check that box, even though we both know once you get out of your fellowship, you're going to be making a lot more money. But if you don't have an offer letter, that's a potential problem with a conventional loan. So it's not just the ability to put down 0%. It's also looking at student loans differently. If they're deferred, we can take them out of the equation. It's coming out of residency. It's coming out of fellowship. So they're just things that are very specific to the medical profession that the doctor loan is able to accommodate. And as little as 0% down is nice because, let's face it, a lot of these clients, they have money or they're going to have very strong income, but they might rather take that money and put it towards paying down student loans as opposed to, putting down a large down payment. So it's a great program to have and offers a lot of flexibility for clients that are medical professionals. We even have a nurse program with as little as 5% down with no mortgage insurance. So not only do we cover doctors and physicians, but we also look at pharmacists, nurses, other parts of the medical profession, which is nice as well. Yeah.
So you have a special program for nurses and pharmacists and attorneys too, right? Was I reading?
And attorneys. Right? So, attorneys as little as 5% down up to 1.5 million, similar to our traditional jumbo product, but there's no mortgage insurance. You don't have to be a practicing attorney. So if you've passed the bar and you went on to do something unrelated to law, as long as you've passed the bar, you check the box there.
It's interesting. One of my mentors told me, if you don't know your options, you don't have any. See, there's a lot of nurses out there. Both my parents are pharmacists, attorneys, if they've passed the bar practicing or not. They have options, but people don't know about it until we emancipate this knowledge to the public. So if you're a physician, a doctor, a nurse, a resident, you have special financing programs, and that doctor loan is so powerful. Every March, and you know this, we get about 40 to 50 residents. They come in to Baltimore because they're doing the residency at University of Maryland or MedStar or Hopkins, and they're looking for housing. So they're going to be here for 3, 4, 5, 6 years, depending on the residency program. And when they realize, when you look at it on paper to say, you can buy this house, 300K, Canton row home, not a penny out of pocket, with a rate that's as good, if not lower, than someone with perfect credit, 20% down conventional, it's a very compelling tool. So if you're a physician, pharmacist, attorney, or nurse, and others, inquire about the programs that you have available to you from your occupation. And it's typically only the banks that can offer these types of things, because these aren't Fannie Mae, Freddie Mac, generic loans. You have to go to a bank that offers these programs. So that's another big one. What else, Paul? What's the bridge loan? I don't want to take you down the technical rabbit hole, but this is another loan that I think, if you're serious, if you're a student of the game and you're a real estate professional and you actually want to provide agency acting on the behalf of others in their best interest, you should know about these things. Hit us with the bridge loan, because this is actually a really good tool if used properly.
Yeah, it does get a little bit inside baseball because everyone likes to say they have a bridge loan now, but when you get into the devil's in the details of what some of these other lenders are offering, it's very high cost. So I'll talk about a traditional bridge loan and kind of what we offer. So we offer a bridge line of credit. So the reason a line of credit is better is because if you make an offer on a house and you have your bridge line ready to go and your offer is not accepted, you don't need to use it. So you don't take any money out. It's like a line of credit. There's a zero balance. You pay zero interest. If you take a bridge loan, you disperse all those proceeds. You're paying interest. You're making a payment. Let's say it takes you 6 to 12 months to find a home. You're paying interest that entire time.
Yeah, no one wants to do that.
No one wants to do that. So it's a great tool. It's a line of credit. There's no points. There's no prepayment penalty. I mean, there's the typical, title fees and processing fees, recordation tax, depending on the city or county that you're in. But it gives you a lot of dry powder and will lend up to 90% of the value of the home.
90 LTV.
Yeah, so 90% of the value of the home, less whatever your outstanding mortgage is. So, it gives the ability for people to, maybe put down 20%, maybe waive the appraisal. It just gives them a lot more options. And it's a great tool, and it's putting a lot of transactions together. we can close them pretty quickly. It just a lot of folks are in that boat where they want to move, but they have equity tied up in their home and they can't be competitive in multiple offer situations. So it gives them that dry powder to make a more compelling offer.
When you're doing that bridge loan, do you have to be using those funds towards another purchase, or can you just get the loan for whatever you want to use it for?
You could use it for other things. I mean, the reason we call it a bridge loan is traditionally, like if you're taking out a home equity line, you're signing an affidavit saying you're going to live in the house for a year. Mm-hmm. So if you want to renovate your kitchen, you do a home equity line. But if you're using it for buying a home, we've even had people use it to make repairs on a house that they're listing. Mm-hmm. So the purpose is to get around the occupancy issue that a traditional home equity line would present, because you don't want to misrepresent the fact that you're planning on moving and planning on not using it as a primary residence. That's kind of the purpose of the bridge loan, but it could be used for a down payment, to repair the current house, to do things like that, to pay off maybe a car loan to help you qualify for that next house. So there is some flexibility there. But you typically would want to use it if you're planning on, transacting in the next 12 months.
I mean, Paul's put together some deals for us that were, I thought, so outside the box, but it made so much sense. And obviously you can tell he explains it so articulately that there's financing options you can use to A, ensure you get the house you want, B, get it with the best rate, and C, find unique ways to win the offer in a world where sometimes you don't think, hey, I'm sitting on $300K of equity, but I need to sell my house first before I can buy another one. You have options, and they're not high risk. They're just process oriented. If you do it right and you deal with a mortgage specialist, you're going to put these offers together. Now, Paul, you're, perennially a top mortgage officer. You see a lot of crazy stuff out there in the market. You win offers, you lose offers like the rest of us.
Yeah. What
are things you see agents doing that you think, man, if they would explain this a little bit better, their clients would be a lot better off?
The earlier we can get in front of people, the better. Like we talked about the nurse program, we've had a lot of people come to us that did travel nursing and they were declined by another lender because they would go from one travel nurse assignment for 3 months, another one for a month, another one for 3 months, and that doesn't fly with a conventional loan. So we were putting out a lot of fires, and it just probably would have been a lot easier if people kind of had all the information up front. So the more proactive agents can be in terms of introducing their client to the right lender for the right situation, or having a couple conversations, just puts them in a much better position for success. Or, we get the call Sunday evening, someone found the house of their dreams. They didn't think they were going to find anything, and then it fell in their lap. Well, it's like they could have made a stronger offer if we had them pre-approved earlier, had a bridge line, put together for them. So there's just so many things we could do up front to position them better for success if we have more than an hour on a Sunday evening. And we can still get the pre-approval done quickly, but sometimes it's nice to have certain things in place so we can have all of our ducks in a row and do a 2-week closing or whatever the difference is for helping something get accepted.
There's no better time than yesterday to start planning your loan front, because you got to know what your options are, and you might have 2 or 3 good options, and then you have to have a conversation with your spouse and just figure out what's right for you. Anything else that comes to mind? Because you see so many kind of radical things. Whenever I get a tough one, I kick it to Paul and say, what would you do here? And the guy can figure it out.
Yeah, we've made common sense exceptions on debt to income ratios that well exceeded anything our competitors would do, just because we understood the situation. We're doing a lot of construction loans. Inventory is limited. People, they want to move for the perfect thing, not something slightly better than they have, because they might have a good rate on their current home. So the ability to, buy a lot and do new construction is very attractive for especially the move-up buyer, the higher-end buyer. We're also doing a lot of, renovation loans, whether that's Northern Virginia, DC, other pockets where someone just comes in, buys a rancher, and knocks it over and builds something, huge on it. Or, just buys a house and needs a kitchen or an addition or something like that. So a lot of stuff outside the box. I think it's a market that, we got used to doing some pretty plain vanilla stuff for a few years as lenders and as realtors, but now it really takes a lot of extra effort, conversations, and creativity to get people in the right position and the right home. No, I totally agree. You mentioned the construction to permanent financing. Just give us the listener the soundbite on that. What is construction perm financing? Yeah, so essentially you find a lot. So you're not buying, a Ryan home in a community that's already sitting there. The difference is with that, you just put down a deposit, they build it for you, and at the end you buy it just like a regular house. This is you're finding a lot, you're finding a builder, you're coming up with plans on what you want to build, and we finance the purchase of the lot as well as the construction. and we'll do as little as 5% down and up to 1.5 million on that, which is great, because most people, same story, have equity tied up in their current house, and they're living in their current house while building the new house. So that usually constrains liquidity a bit.
That's a great product. So a lot of people don't realize when you're going to build a house that's not a national builder, you have to buy the lot. Well, you're buying a piece of land. Most banks don't say, hey, we're not going to give you $300K just to buy this dirt. That's not an asset we want to hold. But banks will say, hey, we'll give you the money to buy the land and give you the money to have your builder build you whatever you want. And those can get semi-tricky, but they're also pretty straightforward if you're dealing with somebody who has the product and they do it every day. So Paul, obviously a wealth of knowledge. What's it cost? If someone said, hey, I should just talk to this guy, we have some unique circumstances, we might be moving in the next 1, 2, 3 years, let's just get ahead of it, figure out, skate to where the puck's going, what's going to be available. How much does it cost to sit down and talk to you about these types of things?
Nothing. We're always available. Happy to speak with anyone, no matter what their time frame is. Happy to work with them and their realtor to put together a game plan going forward, even if it's not an immediate need. I mean, the sooner we can get in front of people and have a conversation, the better we can position them for success in the future.
Well, one more thing I got to give Paul a shout out. When he's not doing loans at a high level, he's playing squash at the Maryland Club. He takes me golfing to Country Club of Maryland, or he's at a pool party at Larendale. The guy knows a lot of people. So one of the things I like that you do, which is an unexpected extra, what all mortgage officers should do, is whenever Paul's on that pre-approval and you submit an offer, he'll call the listing agent and resell the deal. That is something that's so underappreciated, but I see it when it happens, and I say, see, that's somebody I can grow with. That's somebody who wants to make me look good in front of my clients and actually get the deal done. So I really appreciate that. And thanks for stopping by the office. And any parting words?
No, we really appreciate your partnership over the years. I mean, some of those huge banner years we had at Wells Fargo, made us look very good, and you are our number one referral partner, you and your team. So we appreciate all of your support over the years, and love doing business with you as well as the rest of the team.
Paul, you're the man. We're just getting warmed up.